Hey, this is Matt from InvestiQuant. Today is Thursday, September 3rd, 2020. And today we are seeing a gap and go down day after yesterday's trend higher. So we've got a trend higher yesterday followed by a trend down today. We're seeing really large ranges across the board. The S&P intraday range is currently 122 points at the time of this recording, which is the largest we have seen in months. So we are seeing large ranges. It has been a trend down day so far. And what I want to do is take a quick look at what that has led to historically into the close of the session. So let me come into Discover. And I will be looking at all four instruments. We're going to use an intraday time-based entry, and the entry time is going to be 2:30 p.m. Eastern Time. It'll be set up as a long exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Then I'm going to go into opening filters, and I'm going to select gap down. So it's a gap and go down today. I'm simply using gap down. And then in the post-open filters, this is where I can describe the trend-like activity that we are seeing so far today. So the first thing I'm going to use is this intraday range size relative to the 10-day average. And this is going to compare what the size of the range is as of the time of entry, and I'm using 2:30 as the time of entry, relative to that same look-back period of the past 10 days for the open to 2:30 p.m. Eastern Time. So we have huge ranges. We are greater than 150% of our 10-day average for that time period of an intraday range. So I'm going to select that. That is showing that we have a large range. And then I'm going to go select the price action. I'm going to say that the open is in the top 10% of the intraday range. And I'm going to say the 2:30 p.m. price is in the bottom 25% of the intraday range. And then I'm going to hit view results. And here we go. So these are the results of going long at 2:30 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap down and then get a trend day down developing. And I'm defining a trend day as 150% of the 10-day average range taking place in that time period, and opening in the top 10% of the range and trading in the bottom 25% of the range as of 2:30 p.m. Eastern Time. There's other ways that you can describe that, but these are all true as of the time of this recording, so that's what I'm going to go with. And looking at the results historically, the S&P 46 samples, NASDAQ 41, Dow 53, Russell 32. And looking at the win rates of these, this is set up as a long. So historically, only 41% of these have closed above that 2:30 p.m. price in the S&P. The NASDAQ has been stronger. 61% of these have ended up closing above that 2:30 p.m. price. The Dow, just like the S&P here, 42%, and the Russell, about 47%. So three of the four are at least leaning a little bit more towards the downside. And if you look at the average win to average loss, looks like the average loss is larger there in the S&P. The average loss is also larger in the NASDAQ, which had the better win rate. But the average loss is bigger than the average win. Average loss in the Dow bigger than the average win, and average loss in the Russell bigger than the average win. So downside has been, or has had larger moves than the upside historically, and three of the four have been at least a little bit weak, with NASDAQ being the outlier. Let me take a real quick look at this results distribution, and I've got the S&P selected here, so we can take a look at this graph as well. This is showing the distribution of results for the trades included in this back test. So on the horizontal axis, we've got the P&L, and this is based upon trading a single contract. And this black line right here in the middle marks 0. So less than 0 would be to the left of that. So these would all be losing trades happening on the left of this black level. And then on the right of it, those would be the winning trades. The sample sizes are notated here on the vertical axis. So the taller the bar, the more often it has happened. And if we look right here in this gray area, you can see this is where the average trade is at. So if you look at the entire sample size, the average trade has taken place here, and we've got -1 standard deviation here to the left and +1 standard deviation here to the right. So this is where the majority of these trades have fallen with their results, and it looks like on the downside that is around -$800, so 16 points lower in the ES. And on the upside, somewhere just above this $500 mark is where the +1 standard deviation would fall. So you can see the majority of these are falling to the left of the 0 line, The taller bars are on the left of the zero line, and some of these outliers look a little bit taller here as well on the left-hand side, which are the losing trades. So hopefully you found that interesting. Good luck the rest of the day, and we will see you tomorrow.